Before going on with today's video, allow me to indulge myself and talk about just briefly the last video that I did today, where I spoke about the Chinese government is encouraging all of its governmental fleet to switch over to electric vehicles. In particular, I highlighted the police cars where NEO is showcasing them to the police departments to show why our cars would be better because of the battery swapping. So think about it. If someone calls the cops, let's say you call the cop, you're living in China, but the cop said to you, "We're sorry, you're out of our range because we were using Xpengs and the battery degradation is so much so that even with a full charge, we wouldn't be able to reach you. Now you will have to take a machete and trim off some of the limbs of the perpetrator coming through the window, whilst he scream and beg for God and the police. You may not enjoy that, but I will." Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual guys, this is not financial advice. Please do your own due diligence and research. So what else do I have for you guys today? Is NEO stock set for a comeback? Fundamentals say yes. NEO stock might be about to find its bottom soon, which I think it did. That's why we're fighting the $4 range. As short sellers start to leave the scene. Yes, you heard that right. And fundamentals remain strong this year. Investors can rest assured that tariffs aren't likely to impact the stocks. Let me say that again. Investors can rest assured that tariffs aren't likely to impact the stock. And we spoke about that in the past because the tariffs will affect the American auto industry more than, in fact, only the American auto industry instead of the Chinese auto industry, especially the EV industry, because we control the supply chain and we control the infrastructure. Boom! And so much so that analysts are coming out now and downgrading Rivian, Lucid, and Tesla. But why is that? There's one analyst that gave Tesla a huge upgrade, but there's a reason for that as well. We spoke about the way the game is played. Another pump so they can get out. Anyway, during the years of low interest rates and abundant liquidity in the stock market, roughly from 2020 to 2023, a few names were at the top of every investor's watch list, as it turns out, through every cycle. These names eventually came out of favor when the cycle for credit and money markets swings back around to being more expensive and less available, which throws the same popular names down the list of priorities. Even though these out-of-favor stocks might see the stock price go lower and quiet for a little while, sometimes their fundamentals keep pushing higher under the radar, and the broader macroeconomic perspective that would send them to much higher prices during a better credit and money market cycle. So it's like what Jeff Bezos said. When his stock went from $100 and some to like $5 something, he said the stock is not the company and the company is not the stock. So they continue to look at what the company, Jeff Bezos looked at what his company was doing, and they were improving on every margin, just like with NEO. He said he understood where the company was going. So he kept buying shares in his company. Genius. And the same thing is happening again because, like the great Ray Dalio pointed out, history always repeats itself. Today's market creates an example like this in the automotive sector, though this one comes from China, the other side of the world, the Middle Kingdom. Shares of NEO hit an all-time high valuation during 2021 to connect the dots of this cheap money and abundant liquidity cycle optimism. That spreads all over certain stocks with enough fundamental reasons to send them higher. However, after 2021, the stock was cut in half. And then cut in half again a few times to let it sit at the same range for the past 12 months, though that might be about to change in the coming quarters, and we know it is because of why our margins will increase dramatically. This is why after the first quarter, when JP Morgan, who's getting ready to do it, mark my words and remember I said this, say, oh, they're still cash burning and set an even lower price target, that's when money-making Mitch will continue to gobble up shares. Because the cattle, the 99%, will poop in their pants and run again, and the 1% will jump in and buy again. This is the game. Even though shares of NIO have fallen as much as 24.8% over the past 12 months, this bearish path seems to have ended. There are a few factors that investors can take into account and build on this belief. Starting with a zoomed-in view of performance. 10.6% rally over the past month could turn a long-term sell-off into a short-term bottoming. Excuse me, guys. More than that, it seems that short sellers have started to realize that today's stock price and NIO have potentially priced in the worst-case scenarios for the company and China's stock market in general. Over the past month alone, as the stock began to rally, the company's short interest declined by as much as 6.4%, showing the beginning of bearish capitulation. However, savvy investors will likely require much more than just price action, and some short sellers closing their positions as they see the stock start to rally over the past month. Yes, there must also be a mix of fundamental reasons to back a potential buying thesis, and we know that's coming. That bets against the long-term bearish trend that NIO has gone under. Even though the company is not looking great in China, which is arguably going through a declining or even recessionary cycle currently, according to this analyst, spending habits have not left the electric vehicle scene. There will always be sectors where money will pour in, even during a recession. Technology. The latest quarterly earnings report from NIO showed the vehicle sales for the fourth quarter of 2024 rose by 13.2%. Not only did sales increase, but gross profit margins also increased. Have you guys forgotten that? As a result of economics of scale being achieved at the company, this enabled NIO to report a much higher margin of 11.7% compared to the 7.5% from the same quarter last year. This higher margin is also prodigy for the company's pricing power and ability, despite a tough economic environment. So this is what you have to bear in mind. Even with a recession, there are certain parts of the economy will do well. There's always a place to put your money. With this in mind, NIO is creating a scenario where its future operating earnings might take a similar path. You heard that right. Let me say that again. With this in mind, NIO is creating a scenario where its future operating earnings might take a similar path, which will inevitably end up showing in the bottom line earnings and therefore valuations in the stock price. That is exactly what is meant by fundamentals quietly expanding with the stock prices remain compressed such as they are today. On a more recent note, NIO released its delivery numbers for the month of April 2025, showing up to 23,900 units to represent an astonishing growth rate of as much as 53%, aiming for 100% this year. On an annual basis, again, not something that is synonymous with an economy that is as bad as everyone makes it to be in China. And we all know the Western media makes it look, oh, it's doom and gloom. I spoke about that in past videos. All of these factors might have played a role in today's $5.05 consensus price target set for NIO stock, and we know it should be way more than that, which compared to today's prices would imply a net upside potential as much as 26.2%. Us long-term investors don't care about the 22%, 26%. We're looking at thousands of percent because we look for the long game like the great Warren Buffett. We want millions, not a couple thousands. Ultimately, one of the big reasons the stock is kept at this low today is the effect of the trade tariffs that was started by the Biden administration, primarily focusing on Chinese goods. However, it is crucial to remember that NIO mainly serves its Chinese domestic market, the largest car market in the world, where if Tesla were to leave, they would go bankrupt. And some Asian and Latin American regions, and we're going to enter more Latin American regions this year. Colombia, Uruguay, we're going to enter Australia, we're going to enter England, etc., etc. Therefore, this is truly no reason to worry about the impact of tariffs in NIO's economics and stock price, only in the sense that a broader worry might hurt its sentiment and keep the stock price compressed for a little longer, giving you buying opportunities, the 1%. However, the end game in NEO remains the same, with higher prices being set the norm. So should you invest 1,000 in NEO right now? Well, I will continue to invest thousands. I hope you guys found this video yet again to be informational, inspirational, and motivational on a Monday. If so, guys, blah, blah, don't forget to hit that thumbs up right there. Blah, blah, blah. It takes a lot of time to do these videos and editing. And if you haven't yet subscribed, you might want to think about doing so, because on this channel, we are waking up the middle class for the first time to get a major piece of the pie from the ground level up as to how the game is played on Wall Street. And like 50 said, we get rich or we die trying, guys.